Jackie, will we not just see the concentration of kind of wealth or the movement of deposits towards the top four blue chip banks and the complete concentration of that capital towards them?
I mean, I do think you'll see an orientation towards de-risking your deposit base and trying to orient towards systemically important banks or big regional banks like a PNC. And I do think that people will be oriented. At the same time, I do think that you will also find that there can be a lot of local banks in local regions where, if you go back and look at bank failures, you might not find that by proportion, they have the same proportion of bank failures that some of these other companies that are doing, more riskier trades, more creativity around their balance sheet. Now, having said that, Dodd-Frank changed a lot of the way that balance sheets are managed. And so what you are seeing, though, is that banks actually have fairly healthy balance sheets in general. And the controls that they took around capital ratios in 2008 actually have helped. And
Can I jump in on that point, Jackie? Because after Lehman's collapse and the global financial crisis, almost 400 banks failed in the 3 years after Lehman went down. And so then the regulatory frameworks were amped up, liquidity and capital requirements were amped up. And in the last 5 years, there have been a total of 9 bank failures, and that includes SVB. So that is saying something about the way that banks are managed systemically now. The real danger in SVB's failure is actually something that we've alluded to here, and that would be just a crisis of confidence among depositors more generally. And that's not just the very financially sophisticated depositors. That includes your Main Street depositors as well. There are about 4,700 FDIC insured banks today. That's already down by half from 20 years ago, as they have shut down and been gobbled up by the larger banks. But the community and regional banking system is the lifeblood of our Main Street economy. And if the outcome of all of this is a super concentration of funding and control of the banking system into systemically important institutions, that would be a travesty.
Sorry, I'm naive here, Kris. Why is that so bad? They're the safe names, they're protected by the governments, people just want their money to be safe. Why is that concentration a travesty?
So in local neighborhoods are financed by their local banks all across the United States. And it's really important for the flow of capital into cities and towns across the country that they don't have a banking desert, because it really does become the underpinning of credit. And as much as fintech has stepped in to provide credit in a lot of these regions, because everyone now has a bank at their fingertips, the combination of those two is super important in order to just keep your restaurants, your dry cleaners, and your local economies moving across the United States. I worked at Square. I helped build the banking and lending businesses of Square. I guess I left that out earlier. And so, and we built a bank at Square. We were the only tech company to ever have built a bank, right? We were able to put credit in the hands of tiny companies all over the country. And that's incredibly powerful because that now exists in the context of accounting software, tax software, point of sale software, expense management companies like Ramp who can offer loans. And so you're starting to see this evolution of embedded finance actually be helpful. Having said that, if you really look at disclosures underneath all of these financial products, not a dollar has left the banking system. And so it's just reorienting how those loans are being made in different regions. They're all still being made by banks. If you go to Venmo disclosures and Cash App disclosures and PayPal disclosures, there are banks that sit underneath 100% of those products. And so you have to really make sure that you have a healthy banking system that exists across the country. And both things have to be true. Local kinds of relationships and banks like Lead Bank in Kansas City is super important to the commercial real estate market there. And we pay a lot of attention to our local community and how important that is. And at the same time, you have these bigger institutions that have the scale, stability, size. They're systemically important. They spend a lot of time with regulators.